Well, good morning, everyone. My name is Troy Tucker, and I'm the president and CEO of Blue Sky Business Resources. We are a lower middle market M&A advisory slash consulting firm. We have a bunch of people working with us around the country, and we're happy to have everybody on our webinar this afternoon. I'd like to take a couple of minutes and introduce everybody to our panel members. First off, we have Lamar Stanley with GenCap America. GenCap is a private equity firm. And Lamar, why don't you take a couple of minutes and introduce yourself to everyone?
Sure. Yeah, we're a lower middle market private equity firm based here in Nashville, Tennessee, where things are gradually opening, not necessarily in Nashville, but the rest of Tennessee. Not going to live, hopefully it goes well. But what we focus on are not necessarily turnarounds, although everyone's suffering from a little bit of distress at this point. What we focus on more intentionally are 2 to 10 million EBITDA deals with companies in manufacturing, distribution, and basic service companies that have a consistent track record of cash flow. So we are the least venture-ish of private equity funds out there. We tend to focus more on the stable, solid plays as opposed to the high growth options. But we invest all over the country. We have 20 portfolio companies at current, from California to Boston to Miami. And we'll also do a Canada deal from time to time. And what our real niche is around backing internal management teams. So most of our deals take on a management buyout type feel, but that's us.
Thank you, Lamar. Jason, why don't you go next?
Hi, everyone. My name is Jason Dzinkiewicz. I'm with Blue Sky Business Resources. We, as Troy mentioned, focus on lower middle market businesses. We work with them throughout the life cycle of the business, from supporting initial early stage capital raises through finding commercial real estate opportunities, optimizing and preparing for next stage growth, and then obviously working toward a M&A transaction, whether that's facilitating growth through acquisition or facilitating the exit of a founder through an M&A deal.
Thank you, Jason. Aaron?
Thank you, Troy. Aaron Todran here, president of Second Wind Consultants. We are a consultancy that focuses on reorganizational transactions through Article 9 of the Uniform Commercial Code. We take businesses that can't support their debt service, walk them through an Article 9 transaction, preserve the business operation, preserve the jobs associated therewith, and provide a win for everybody involved, including the business owner, the creditors, the business itself, and the jobs. We are agnostic as to industry and region. That's what we do.
Thank you, Aaron. David Stahl is with us. He's from Hillcrest Bank. And David, why don't you take a couple of seconds to introduce yourself, but then also why don't you give us an update on where the country is in relationship to the CARES Act and to the PPP loans?
Sure, thanks, Troy. As you mentioned, David Stahl, I'm managing director for the commercial bank here in Utah. For Hillcrest Bank, we're part of a family of brands headquartered out of Denver, Colorado, under the name of NBH Bank. In Colorado, we have Community Banks of Colorado, and in Kansas and Missouri, we have Bank Midwest. And so we're a super regional style community bank focusing on the lower middle market, mostly commercial and business banking style clients. I like the idea of 2 to 10 million in EBITDA. That's really our sweet spot here. And so that's sort of what we do. From a CARES Act perspective, we are 2.5 days into round 2 of funding. We are striving here. First round of funding, our family of brands got through nearly 80% of the applications. Round 2 of funding, we're trying to get through the rest of the 20%. We're striving for 100% execution in terms of pull through for applications. We did not stand up technology here, so one of the things that's set us apart a little bit, it's really taxed our infrastructure here at the bank, but it's ensuring that the businesses that we're working with are getting access to the capital through the program. And so we're at about just under 2,500 applications so far, and we're striving to get through all 2,500 of them. I think many banks, I think it's been very public, many banks have seen a good bit of stress and strain related to the system. I don't know if I need to revisit any of those, but just check out any of your Yahoo Finance or Bloomberg, and you'll see the articles. The E-Trans system just continues to be a giant pain for everybody. For us, we're not banks our size, sub 10 billion, generally are not doing the batch files, and so we are keying in each application to the E-Trans system manually, and so that is helping us a little bit. But we are all falling victim a little bit to the system crashing, and so the intent is that we'll continue to monitor that, see how we can be helpful and advise clients and companies on trying to work with their banks and what they need to do and say to get updates. But we're moving through round 2 of funding, and we're anticipating that it should probably exhaust end of this week, early part of next week, assuming that we don't continue to have system issues. But that's what we're working toward right now, and hoping that if there's still need in the community, that the administration will stand up around 3 of funding to continue to get these businesses the support they need. Big thing that I'm waiting on, and a lot of other bankers are waiting on now that we've advanced so much of these PPP funds, is the criteria around how to work with our clients in the SBA on the debt forgiveness side. So more to come on that, and when we know more, we'll make sure the community and the businesses know more. So I don't know, Troy, if I took too much time, but that's the update that I have right now.
No, that was very helpful. I didn't think the money would last that long, and it turns out it's not. So.
Well, we have a March Madness pool going right now. We had a couple of April 29ths. Those people are probably going to lose. My bet was on May 1st, so Friday at noon Eastern. So I'm still in the running.
Awesome. Put me down for May 1st too, will you? That's fantastic. Well, as we do at Blue Sky, we always try to look at things from a holistic side of business for business owners, and which led us to this diverse panel for the webinar. And so I wanted to start out with Lamar Stanley, as he does the private equity and looks at buying businesses. And we know that there's going to be a lot of distressed businesses, and we're trying to show another alternative to bankruptcy here today, and it's a way to help the business survive. So Lamar, I know that you guys are not a turnaround focused shop. I know that there are private equity firms that solely do turnaround. But how are you thinking about distressed companies at this time in distress, and what is GenCap's thought process?
Yeah, so on that note, I mean, the thing that we and a lot of private equity funds, I think, are thinking about right now, first and foremost, is managing the current portfolio as opposed to getting out and doing deals. We have more or less looked at all of our portfolio companies in terms of liquidity. So who is going to need cash is king, right? So we are trying to figure out who is lacking and who's going to need it, and who we need to take drastic action to help. Thankfully, most of our portfolio is doing pretty good, and we are more or less tiering our portfolio into 3 groups: the green, yellow, red. Green companies are the ones that are doing great. We actually have 4 that are thriving in this environment. One's a grocery store chain, so you can imagine they're having a pretty good quarter. One is an e-retailer. Everyone's sitting at home and ordering their products. And the last 2 are essential healthcare related. So those companies are fine, green light. The yellow ones are the ones where fine, certainly impacted, but not in a dire situation. And then the red are the ones where we're really keeping a close tab. And by keeping a close tab, those are the companies where we've built the 13-week cash flow projections. Those are the ones where we're watching AP, AR, line of credit, and just trying to make sure that we navigate this well. And we're also doing all that contingency planning. We'd like to think, since we're opening up Tennessee this week, that this is going to be ending in the relatively near term, but we are realists, so we suspect that we're not at the finish line yet. So we're keeping our fingers crossed that while we also do all this contingency planning for a little bit longer haul.
Right. What are the KPIs you guys are considering or looking and thinking about when dealing with your companies and that are in the red? I mean, what should other people be thinking about?
Cash flow is number one. If there's a company of ours that's in that red bucket, that's really all that matters. And the key elements, we're building these 13-week cash flow projections where it's a fairly simple model. And I use model pretty loosely. It's just a spreadsheet that cash in, and we go through every client and when we expect cash to be coming in the door across the 13 weeks, cash out, every line item that's essential. And then we're looking at the line of credit against the net of those things. And so, we are doing, we're watching revenue. That's the most important KPI that's going to be affecting that cash flow model. And for revenue, we're doing the contingency planning for, all right, if we saw a 20% decrease, what are the actions that we would need to take, the 40% decrease. And that's really, for the red bucket, all that matters. The others, it's just the normal KPIs for the business.
Gotcha. So how do you go about constructing your cash flow projections?
Yeah, I mean, it's a different thing than just closing the books every month. So it is getting into very granular detail. Just a WAG, frankly, is not what we're trying to do here. We're sitting down with CFOs and sales teams and saying, all right, what AR is realistic? Same for accounts payable. Where can we make sure that we're preserving cash? And you're just going client by client and just trying to figure out what should we expect, what is the worst case scenario, and then somewhere in the middle is where we like to land.
Okay. And then have you guys considered any alternate business models within those companies that are in the red?
Yeah, I mean, everyone gets pretty creative.
Right.
Necessity is mother invention, right? So we're trying to, stick to the core of where the businesses are staying successful. So, if you had asked me which one of our 20 portfolio companies in February, which one was going to have the best quarter this quarter, I think I would have put the grocery store down at the bottom, and of course they're at the top. And the only reason I bring them up in this conversation is to say that we're trying to identify where we can be very successful during this period, and we're attacking it. So one of our portfolio companies, about 20% of their business was done on Amazon before this. Well, we're trying to dial that up during this time. And so, unfortunately, we do not have a portfolio company that's in the business of making face masks or rubber gloves right now, sadly. But we are finding other avenues where we can generate a little bit more upside.
Yeah, that's outstanding, man. So what are the things you are telling your CEOs as they watch this crisis unfold?
One, manage cash. That's the thing that's going to kill us. So it's got to keep a steady eye on that. The other piece is, and I'm sure you guys are saying it to your clients as well, is don't let a bad situation go to waste. We've had a lot of companies where we've had ideas that are a little bit farther down the list. Well, in many of our portfolio companies, we have a little bit of time. So we can execute on some of those strategies, whether it just be organizing sales databases or, taking hard looks at some of the necessary or unnecessary expenses in the business. And the other piece we're telling our CEOs is saying, look, no one ever regretted taking early action. Looking back at 2008, you don't want to be on your heels. You'd rather be on your toes. And so with all those contingency plans that I went through earlier about the 20% drop, 40% drop, being able to execute on those the moment you see that's really the key. We'd rather be acting as opposed to being acted upon.
Right. I totally agree with that. It's one of our things that we talk about is you can use this time to really build a strategic plan and start looking at ways to move your company forward after the coronavirus has settled down a little bit. In the lending markets, what are you seeing?
We're seeing things tighten up a little bit. I would love to hear David talk a little bit more about that. But bankers, as David did allude to, they're busy. they're doing a lot of other stuff. So, while guys like me are trying to pursue new deals, I'm not going to say it's difficult, but getting their attention, we got to make sure that we mean it when we need money, because they've got a full plate right now, getting out PPP loans, doing triage on their own portfolio. So, and I see at least another few weeks of them having full days before they can go out and do any extra science projects with us.
Yeah, absolutely. I was talking to one banker and he was complaining about working 108 hours a week. And I'm like, well, you've spent how many weeks working 20? So you're just catching back up is all you're doing.
David
so.
Right.
I take total offense to that, Troy, by the way. Total
Figured you might, David. I was talking with David a week or two ago, and he apologized for not getting back to me, but told me he was closely monitoring one of his clients because their cash flow was just dire. And they were having a bad situation. They had money outstanding. And I know in our own personal circumstances, we've got a couple of deals that are on hold. We just can't get the bankers to move. And we also realize that they're really busy with these PPP loans. David, do you have any insight into that?
Yeah, I think
next. Go ahead.
Yeah, I was just going to say to Lamar's point, I think it's, depending on the size of the bank and what their participation is, whether it's with PPP or just sort of the risk that's inherent in their existing portfolio, I think you're going to get a mixed bag. I've talked to some people that are only doing PPPs. I've talked to some people who have really pulled back on lending efforts just broadly. And then, I think our view, and this probably goes for all of the three brands that I mentioned, is that we're definitely being a little more selective, but we're not, and we're not hiding from the risk. We've got a handful of opportunities that we're pushing through the pipeline that are fortunately related to businesses that have actually excelled during this during this current economic crisis. And so I do think we're approaching, even though we have generally a conservative risk tolerance, we're still proceeding very cautiously and just trying to make sure we understand the risk. But we're not shutting down our lending efforts at the moment. So we're definitely we're not bullish isn't the right term, but bearish isn't the right term either. It's somewhere in between.
Sandy, yeah, that's good. Jason, having said this, I mean, the idea for this conference call or the Zoom call is to make sure we present a holistic approach to this. So I'd like for you to kind of go into a little bit of detail about our own consulting processes and services and what we do. Then we'll bring in Aaron, and that's going to tie in nicely to what Aaron does with the Title IX stuff and helping position companies to be able to be sold by removing some tertiary debt or debt that they can do. And then, so Jason, maybe you could give us just a little bit of insight into our own consulting services, and then I'll have some questions for you as you go through that, I'm sure.
Yeah, absolutely. And, it's great to follow Lamar because he's the living embodiment of a lot of the things that I'm going to be talking about. First and foremost, when we sit with business owners, especially business owners that feel like the business is circling the drain, there's this feeling and the sensation that everything around you is speeding up and you don't have time to deal with the immediate problems, let alone deal with, the bigger picture of saving a struggling business. And so one of the first things that we like to do is to just get people to slow down, take a breath, take a step back. And you notice Lamar is managing a portfolio of a lot of businesses that are in various stages of struggling through this time, but his approach is calm. He's methodical. And that's the first step. If you're in a mode where you feel like you can't look beyond your feet and you're only reacting to the next major crisis, you're never going to be able to get out in front of it. And so we always try to talk to people, slow down, get back to the basics, take a focus on digging deep on what are your core capabilities and skill sets? What was the business founded on? And what did those things look like when you were successful? Once we get back to that core, we can also look at the values and the vision that got you started. And then we can go from what got you started and where you found success to what changed. Sometimes things change internally. Either the team got complacent or they got overly aggressive in their diversification, or they had, they had a dog in the hunt. They put a bad product launch out there, and it's really dragging the rest of the core business down. So, if it's internal, we can look at what can we do to, to step up our game internally. A lot of times, like what everybody's experienced right now is the external forces, the things that the business can't foresee or completely, remove risk from, things like this, this coronavirus that, there's literally no way to plan for a pandemic. If you're a business owner, if you're the CDC, maybe there is a way, but as a business owner, you can't plan for a pandemic that's going to shut down the economy. But once you recognize the disruption, then you can start to look at, like Lamar said, don't miss an opportunity when bad things happen. One door closes, another door is going to open up. So figure out, how did this change the landscape, and what opportunities are being presented that fit your core capabilities, and how do you generate revenue from that? How do you maximize out of that? And then from all of that regrouping and that, getting back to basics, you can start to put together a clear vision. And once you have a clear vision, then it comes down to first communicating internally, getting your team calmed down, getting them comfortable and confident again, and driving the bus forward, sharing that vision, communicating that vision. And then, the last phase is, the harder things are, the more you have to communicate. It's our natural tendency to, when things are bad, to want to hide ourselves in the office and just put our head down, not talk to anybody until we've got the problem fixed. And that's the absolute wrong thing. With your staff, you want to be proactive and let them know, yeah, you know what, it's tough today, but we've got a plan, we've got direction, and together we're going to get this worked out. But then there are all the other stakeholders. With your vendors, you can talk to them and say, hey, what can we do? How can we work together to figure this out? We're not going to default on our relationship with you, but we need to get creative today, because this is the truth about what our cash flow looks like. You have to do the same thing with your banks, with your, with everybody around you that is counting on the business, either for product or, for payment. Talk to them, communicate every single day, let them know what your plan is, and then show them how the plan is taking shape, so that they can be patient and proactive with you. And sometimes, I found with business owners, once they start that line of communication, they'll have people within their network that can offer advice, that can offer support, that can offer guidance, and they can get opportunities where, where they weren't even thinking or looking. So, some of those things are the key fundamentals for any kind of disruption or any kind of downturn that a business faces. Those are the things that you start with. Some of the things that I noticed that Lamar said he and his team are doing that are absolutely perfect. First and foremost, when you create your plan, keep it simple. Make it easy for people to not lose sight of where they're headed because they're so busy filling out the model or keeping track of the plan. Just, the bare minimum of what they need to do to know where they're at, to track progress, to adjust midstream as they need to. Keeping it simple is really important. The other thing that I really liked is, as he was communicating, all of his frontline teams have marching orders. He's talking to everybody from the boardroom all the way to the front line. And every single person has a priority. Every single person has something that they're responsible for. And as long as everybody's carrying their small piece of the puzzle, the business coalesces and the critical items are being taken care of. And then, like Lamar said, cash flow is critical. Once you know what you're doing, you can determine what isn't essential. You can take a step back from the expenses that are non-critical and devote all of your resources to the critical items and to making sure that the business is moving in a forward direction.
Well said, Jason, for sure. One thing I forgot to mention when we first started is we would like this to be interactive. The chat feature is working. If you guys have questions, please feel free to type them in. and send them to any one of our panelists, and we'll make sure we answer them. So Jason, if I'm a business owner and I'm sitting there and I'm kind of in that position of, I don't know where to go or what to do, where's a good place to start? How do I know where to start?
Well, a lot of times the team around you, the leaders that helped you get to where you are, they're a good place to start. And if you sit down with your core leadership team and you are all stumped, look outside for help. Obviously Blue Sky Business Resources is here to help, but we're not the only ones. Your CPA, your lawyer, a lot of these trusted advisors have been through this before. They've seen other business owners that they've worked with struggle, and they can, either point you in the right direction or help you find resources. We have a free high-level assessment that you can take just by going to our website at blueskyadvisors.net, and that'll help you get some key points of organizationally and strategically what are the big opportunities for you. So, it's never a bad idea to ask for help if you're stuck. And, there's going to be somebody in your network or somebody on this call that would be ready, willing, and able to get you guidance, point you in the right direction, or make an introduction to somebody that has the skills and expertise that you need to identify your opportunities.
Yeah, that's absolutely right. We have some outstanding partners with the Elevate conferences. Now CFO is actually a really good resource as well. And I'm sure Chris Badger would be more than happy to help you out and work with you in those regards. So what if you're going through and you've come up with all these opportunities? What if you can't just pick one to start on? Could you get lost in too many opportunities and not be able to be successful at that?
Oh, we see it all the time. We actually coined the term analysis paralysis, where you're spending so much time in your spreadsheets, looking at the opportunities and the gaps that you're not spending any time going out and actually implementing. It really comes down to what is the most critical need, and then identifying what can service that need first. I'd love to hear, Lamar, how you and your team do it. But a lot of times it's one of two things. Is it a cash opportunity or is it a resource opportunity? And then you look at your timing. If there are things that you can change in a day or a week that don't cost a lot of money but will lead to impact, do those things quick. Give your team a couple really quick successes that they can then build on for the harder, longer term change strategies. The other thing is, if you can do something that's free versus something that's going to take a major capital investment, you got to look at what the benefit is. Sometimes you want to just do that free thing because, hey, I don't have to open my checkbook and I can do it. But if it's not going to give you return on investment, then free sometimes is the most expensive path to take. So really look at what your needs are, what your true capability is, and then think about what's going to have the fastest and fastest impact and the largest ROI, and really start to prioritize against resources and needs.
Outstanding. All right, so one question that's kind of running through my brain is, what if I did what you said and took some time to look at the big picture and I still can't figure it out?
Yeah,
I've talked to my management team. I'm just still sitting there stumped.
That's when you really need to go and get some outside help. A lot of, depending on what your core business is, there's going to be some form of peer group. There are a lot of industries that have trade associations where people are more than happy to share best practices, share war stories, and really want to create the rising tide by helping all of their peers succeed. There are, obviously the advisory firms like Blue Sky Business Resources that this is all we do day in and day out, work with business owners and help them survive and thrive. And then there are going to be other networks as well. I know that Lamar, as a private equity leader, He's involved in many associations, both peer group associations as well as trade associations, because that's where you get your best practices. That's where you hear what other people are doing that works. So, depending on the immediacy, if you're really in that desperate place, find a third party, support provider, somebody like Blue Sky Business Resources that can come in, put boots on the ground and work alongside of you to get over the next hump. If you've got a little bit of time, you see yourself going in the wrong direction and are struggling to turn the bus around, peer groups and your local close trusted advisors, your CPA, your lawyer, those people might be a good place to turn to for guidance, tips, and best practices.
Yeah, outstanding. All those resources are certainly available and great places to go. Do you have any final parting comments, Jason, before we turn the time over to and start working with Aaron here a little bit?
The only thing that I would say is, as entrepreneurs, I think that everybody on this call can appreciate the amount of personal accountability and pride that business owners feel in helming their dream and their vision. And so when things start to turn, negative or start to turn sour, it's really easy to take that very personally, and again, to want to crawl into a dark hole and never come out. There is no shame in asking for help. This isn't a business turning south is normal in the life cycle of business management and operation. Taking the steps, putting your pride on the shelf, and going out and getting the resources that you need. That's the key to surviving. And don't beat yourself up. And because a business is failing, that doesn't mean that you as an entrepreneur are failing. It just means that you have an opportunity to change your paradigm and do something different.
Well said. With that, Aaron, why don't you talk us through a little bit about the Article 9 process, what that is, how is it different than bankruptcy? How painful is it? Just give us a little bit of insight into it, if you would.
Certainly. Thank you, Troy. So just to piggyback on what Jason said, I completely agree. And the life of the entrepreneur is hard enough. These men and women have to figure out how to properly make a product, deliver it to clientele consistently, effectively, efficiently, with profit margins at the end of the day. That is a career. It's not just a full-time job. It's a whole career. And then to ask them to figure out all of the nuances and ins and outs of running a business, that's an entirely different career that people go to school for and figure out how to do along the way. It's an incredibly daunting task. So I have an unlimited amount of respect for the entrepreneur. But the reality is that we live in a capitalistic society, and failure is a requirement for capitalism. It is just the reality of the world we live in. It's a necessary part to the entire machine. So when it comes to dealing with distress and dealing with unsupportable debt, let me first say that the best option is to try to work your way through it, to figure out a way to restructure, to reorganize, to pay your debts, to work with your creditors, to find a way through so that you don't have to take more drastic measures. However, sometimes it's not realistic. Sometimes payroll is looming a week away and you don't have what it takes. You don't have the cash in your account to make it. Sometimes vendor payments are cutting you off and you can't get your materials. And reorganizing your business and trying to fight your way through is simply not an option. And especially in times like these, it's important to understand what the options are that are available to us as trusted advisors and to you as entrepreneurs. And one of those options is called an Article 9 transaction. And what it is it's a reorganizational transaction that takes the form of a simple asset sale. It is far more efficient than bankruptcy for a number of reasons, but take a look at the stats for a Chapter 11 bankruptcy reorganization in and of themselves. It comes with a 75% failure rate. And of the 25% that try to go through a Chapter 11 reorganization that succeed, those 25% are typically the big Fortune 500 companies that have a plethora of cash that they can use to fund the process and ensure business viability to make it through. So for everybody else, for the regular business people out there doing under 100 million in revenue over the course of the year, bankruptcy is a really challenging prospect for a number of reasons that I could spend the next hour about. I am also a lawyer. I was a bankruptcy lawyer, and I left that field because, quite frankly, it was inefficient, and there are a number of more creative ways to go about serving financially distressed companies. So that's when we got into the Article 9 transaction service. And what it is when you distill it down to its simplest concept, it is a sale of business assets for the benefit of the first position secured creditor. And through this transaction, all of the subordinate debt is stripped off of the business operation and stripped off of the assets, allowing the business to continue to operate through the transaction. So if you take a step back and you think about the options available for a business owner in financial distress, there are very few options available. One is bankruptcy. We talked about that comes with a 75% failure rate. That's not a very good option. One is reorganization, and that is an excellent option if it serves your needs and your context and your time. Another option is more capital. We see a lot of businesses inundated with things like merchant cash advances, and there's a way to responsibly get more capital, and there's a way to irresponsibly get more capital that is only going to expedite your path to failure. But Article 9 is a different option. If you take a minute to take a snapshot in time, if a business fails and we don't do anything, the first position creditor is going to liquidate the business assets, recoup as much value as they possibly can, and write off the deficiency balance. If there's a personal guarantee, sure, they'll go after the personal guarantee to cover that deficiency balance. But the truth is that that personal guarantee follows a person that just lost their business because it failed, and the chances are that PG is not worth very much. So what Article 9 is it leverages that exact reality. It facilitates that process almost exactly as if the bank were to go through the liquidation process itself, but it is a holistic multi-party solution that is done by a third party that brings all of those parties together.
What is to stop an unscrupulous character from taking advantage of this and getting themselves out of a bad position, Aaron? That's kind of been one of the thoughts I've had as you've been talking.
Yeah. So if you're a business owner and your business is financially strapped, over leveraged, can't support its debt service, you qualify for an Article 9 transaction. It's really quite that simple. If you do not, and you're trying to abuse the process, and you're a business owner that says, boy, I got a lot of debt, I'd love to walk my company through an Article 9 transaction, strip off all the debt, and make it through on the other side. What prevents that from happening are two of the very simple requirements to conduct an Article 9 transaction. One of those is that adequate consideration is exchanged for the sale. I can't sell it for $1 to my brother and strip off all the debt. The other is it requires a bona fide third party purchaser. So in order to walk through an Article 9 sale, you have to give up ownership in the company that you currently own. Now, some people view that as a non-starter. Well, the spirit of an entrepreneur is one that is going to fight until the end. So if it's not quite at the end, why are they going to give up early? Why are they going to give up ownership? And the answer is very simple. You can fight until the end, but the alternative is that you walk your company through an Article 9 sale. We preserve the business, preserve the jobs, and you get to take an employment role in the company. Hell, you can even be the CEO. As long as you're not an owner of the company, then you can play any operational role you want. And then once the Article 9 transaction is done, over time, by preserving the business, we also preserve the opportunity for you to earn your way back into an ownership role. So there's a tremendous value proposition for business owners to take advantage of the Article 9 sale. because they go from spiraling down the drain, as Jason described, quickly to preserving the business and preserving their way and their path back into an ownership role at the end of the process.
Outstanding. Are there litigations concerns or risks
Yeah.
that go along with the Article 9, Aaron?
So thank you for asking that, Troy. One of the reasons why people prefer bankruptcy is the fact that all decisions are rendered final and decreed by a court. And that has that feeling of security, and it makes people feel good. And if it doesn't have that court stamp on it, then it can't possibly be final. Well, the Article 9 process is a self-regulating process that was thought out very well. So, for example, back to the example of if we don't do anything and the first position creditor liquidates, the second position creditor only sees its first dime until the first position is paid in full, which means that if you further go down the list of creditors, there's even less and less likely chance that they're going to see a dime at all. So for that reason, litigation is very rare because of the transparent element of the transaction. For every Article 9 sale, every single party of interest is notified of it, and they're given 14 days to object. If they object, they have to describe their damages, and they're only going to get damages to the extent that the first position is going to be paid in full. But what are we talking about here? We're talking about a sale of used business assets. Well, used business assets go for pennies on the dollar, and it's very seldom that the first position creditor is going to get paid back in full in these situations. Sometimes it happens. In that position, there are ways to address it, or perhaps the Article 9 goes through the second position. But of the 2,000 transactions that we've done over the last decade, I could count on two hands the number of times that that's played a role. So litigation is not a risk because the transaction doesn't close unless the objection period goes without any objections being filed. If any objections get filed by subordinate creditors during that 2-week window, then we address them. But if we for some reason can't address them, then guess what? We don't close the transaction, and there's no risk of litigation. If the 2-week window closes and no objections are filed, and then they try to file an objection thereafter, they lost their right, they lost their privilege, and for that, and for those reasons, there is little to no litigation risk in going through this process.
Outstanding. Why would a banker like David Stahl agree to a transaction like this?
So any lender, any private equity group, any banker, they obviously want to make sure that they are fully secured. And the better they are at doing underwriting and doing due diligence, the higher the chance are that they're going to walk out of the situation without taking a haircut. But the truth is that happens. And there are some groups out there that protect themselves in ways that they always get their money back no matter what. But I'll tell you right now that it happens very frequently that lenders take haircuts when businesses lose. It's part of the reality. It's part of capitalism. It's part of their model. David and Lamar can talk better about this than I can, but understanding that the SBA is behind them guaranteeing their loans, it's an incentive to invest in businesses across the country. Businesses fail. It's part of the reality. And when that happens, what are their options? Well, there's bankruptcy is something that could play a role, but that's not really that beneficial for banks. Ultimately, it's just going to the assets are going to get liquidated anyway. And historically speaking, generally speaking, banks are not very good at liquidating assets. And the reason for that isn't any fault of their own, but it's really the circumstances. If you think about it, we're already talking about a non-performing loan, which means they're already losing money. Then they have to invoke the legal process to begin the foreclosure of those assets. That costs money. That requires lawyers. They cost money. They have to hire auctioneers. They take a cut. And all, at the end of the day, they can only at best hope that somebody's going to buy those assets. So the alternative is when we talk about an Article 9 transaction process, it's every single one of them involves the bank's enrollment. So it really is presented as an option. Hello, bank, we have a distressed company. There's a viable business operation, but it can't sustain its path currently. So you can liquidate, or you can conduct an Article 9 transaction. And the way that we operate, the best way to go about conducting an Article 9 transaction is by identifying the buyer and pre-packaging the deal so that the bank can analyze both options simultaneously. On one hand, they can go through their own liquidation process. On the other hand, they can go through the Article 9 process. And as part of the Article 9 process, it's prudent to always get a bona fide appraiser of the asset value so that you can measure it against what the bank would otherwise get in a forced liquidated context. So we're talking about liquidation. The question is, can we preserve the business and the jobs and skip the whole process that the bank doesn't like doing? Or is the bank going to take their chances on their own, hope for the best, and incur the additional expenses and time and resources to get there?
So I have a thought, and it's kind of running through my head. How long, I mean, you keep talking about the process, but how long does this process take? And it sounds like you have to know the buyer up front. Like you already have to have a buyer when you start this process. Is that an accurate assessment as well?
No. Yes, you always need to have a buyer. It's a sale. So for any Article 9 transaction, there needs to be a buyer. But no, the majority of clients that we engage, very few of them have a buyer coming into the process. But there is always a strategic buyer, and it's something that needs to be addressed. It's part of the nuances of conducting the Article 9. The process can take anywhere from 30 to 90 days. And, the transaction itself, it takes a week to prepare all the documents, and then you have to wait the 2-week notice period to all subordinate creditors. But it's not the process that takes time, it's the preparation. And identifying the buyer and identifying the financing for the transaction is, those are the two biggest time barriers. And typically what we see is that it can take anywhere from 30 to 90 days to close the entire transaction.
Another question I have is, what size businesses based on revenue or could take advantage of this? I mean, if you're running, a small salon, massage salon or something like that, are you a candidate for an Article 9 or do you need to have more revenue?
Yeah. So on the smallest scale, this can work. Typically, we try to keep our water lines at $100,000 in debt. If you have below that, then the cost and the time is typically not worth it, although there are exceptions. However, the ceiling is much higher. It's an arbitrary ceiling at about somewhere between 80 and $100 million in revenue. When you start to get to companies in that size, you start to see banks and lenders with more robust covenants and easements that allow them to have more control of the business, and they have more reporting and tracking. And if the business is starting to go into a downturn, they'll see that from a mile away, and they'll take their own steps, their own measures to protect their asset and to protect the business. But under that, we have serviced companies that do 1 million in revenue or that do 75 million in revenue, and that's across every region in the country and every industry. There is no differentiating factor. Obviously, the process it has a little bit of a difference whether we're talking about a company with heavy assets, such as a manufacturing company, or a service-based company, such as any service-based company where there isn't hard assets. The process looks a little bit different in practice, but there are very few limitations there.
Does anybody, any of the attendees or participants have any questions? Aaron, do you have any final notes, or Lamar or David or Jason at this time?
Yeah,
I'll start with you, Aaron, first.
These are unprecedented times. And the goal here is that we stick together, we work together, and we understand the options available. We had 10 years or 11 years of growth, the longest period of growth in our country's history. And people weren't necessarily prepared for this extreme of a recession. So to be able to share this information in light of such a hard and quick recession is really important. And to understand options and to understand the scale of those options and what to do when it's incredibly daunting. So that's all it is. You know, there's no cookie cutter solution for any business throughout this process. And what works for one is not going to work for the other. And we have to go through it together. So I know that Article 9 as a reorganizational tool is something that isn't used very often. It's typically just reserved for liquidation events. But spreading the word and educating as many people as we can to provide as much benefit as we possibly can to the entrepreneurs out there struggling through this pandemic is the objective.
Thank you, Aaron. Well stated. Jason, any final comments, thoughts?
Yeah, I mean, just building on what everybody else said, you know, a couple cliches come to mind, but you know, the idea that it takes a village to raise a child, and the thing that we always notice is that for every business owner, the business is like their child. You know, building that community and bringing the people around you to help overcome these challenges. You know, there are always going to be challenges. This is an unprecedented time, but we did make it through the Great Depression, and we've made it through other major challenges, and we're going to do that by one, coming together and working together as a community, not working for our own personal individual gain. And two, you know, just keeping our eyes open for the opportunities. There's always an opportunity in change. And so the more that we can focus on our community, on raising our children right, and seizing the opportunities that this massive disruption are creating, the stronger we'll all be coming out of it.
Well stated, Jason. Once again, this is all a man-made disaster here too. I mean, the coronavirus, well, there's some argument that could be man-made as well, but certainly the economic depression that's going on is a man-made thing, and hopefully we can flip the switch and start seeing it come back in levels. Lamar, do you have any final parting comments or thoughts?
Not really. Just to echo something Jason said earlier, I just want to thank you for having me on. It's these types of interactions. I joke often that I'm a little off the fairway in the M&A world, living here in Nashville, but it's never been more true now that I'm holed up in my dining room for the past 3 weeks. So it's always helpful to hear. I've learned a few things just listening to other people's perspective and what people are seeing and hearing out there. So thanks again.
Lamar, we appreciate your participation as well. Aaron, you as well.
Thank you, Troy.
David, last final thoughts. I don't see any questions coming in, so if I see a question, we can answer it real quick. But David, what are your final thoughts?
Yeah, I think just a couple real quick. First off, if any of the participants still are trying to track down their bank and where they are in terms of PPP, my advice for you is wear your banker out. Call them constantly. They should be able to tell you. One of the best practices over the last month that I've experienced is people who had an advocate on the inside found the greatest success in accessing, getting their application through. So wear your banker out. And when you feel like you've worn your banker out, wear their boss out. So, squeaky wheel in this case. And then just sort of piggybacking on what everyone else has said around opportunity. Listen, these are unprecedented times, but, for some it creates opportunity. And, having a relationship with a trusted advisor, whether it's anyone at Blue Sky, whether it's Lamar, whether it's Aaron, whether it's your CPA, whether it's your bank, I'll advocate for the bank side. Don't be afraid. Transparency and consistent communication will make sure that your relationship exits this crisis, if you will, on solid footing. And I would encourage you, outside of the PPP, if you're not hearing from your banker, you should try to wear them out again on that front, because just in working with our clients during this time right now, it's really created some great bonds, and I look forward to helping them in the next round and sort of the balance of the year and trying to allow them to take advantage of the opportunities that will be in front of them. So those are my parting words. Thanks for having me, Troy, in Blue Sky. So.
Yeah, thank you, David. So we appreciate everybody being on the call today. Once again, we really feel strongly like a holistic approach looking at the situation from all angles is going to provide company owners, business owners with the best solutions and business with the best solutions. And we're all interested in in businesses surviving and then having great opportunities on the other side of this. I think that a lot of opportunities are going to be presented through this pandemic. I think there's going to be quite a few learning lessons too. And we're excited about the future here at Blue Sky. We think that the future is going to be bright. And there's going to be a lot of opportunity. We realize that there's going to be some short-term struggles, but we certainly hope that nobody gets so caught up in the short-term struggles that they do things and make rash decisions that have, an everlasting effect. So we encourage everyone to, reach out, have conversations with people. Just getting out of your bubble is going to be extremely helpful, and having conversations with some people that do think there's opportunity out there and do see things, and talking to David Stahl on the phone and talking about loan processes offers people hope. Talking to trusted advisors and exploring options with Aaron Todron if you're down that road, it could be very helpful in some of the processes you're going to. And as Jason said, we do have a survey that you can fill out on the website. And it will provide a very robust report back to you about your business and identify some gaps and some analysis. We also have the Elevate conference coming up. That is May 28th. It is from 8 o'clock in the morning until 1 in the afternoon. We have confirmed the Lieutenant Governor of Utah, Spencer Cox, will be on our first panel in the morning. We have 3 well-known, respected economists that will, I hope we can inspire a strong argument amongst them. We have 3 business owners that will talk about their success during the pandemic and how they either turned the switch on their business and they're thriving, or as Lamar said, a business owner that was set up right from the beginning to be successful, and then how they dealt with the increased demand. Our keynote speaker is Angie Morgan, and she's fantastic. We also are going to be offering mastermind sessions. Those are going to be live. And then there's 3 hours of CE that's available for all CPAs, lawyers, financial advisors, and insurance agents, to my knowledge. I'd love to see all of you be there for the event. You can go to the elevate-biz.com website and register. All of our sponsors do have discount codes that they're going to be sending out, and we look forward to seeing you there. If there are no other questions, I think we can say goodbye to you all, and we really appreciate your time, and thank you for being here.
Yeah, thanks a lot, everyone.
Thanks a lot.
Everybody have a great rest of your afternoon.